Hello, investors. One more video before I let you go for the weekend. SNDL, let's talk about it one more time to close out the week. Now, SNDL is definitely being compared with Tilray. We've got USA versus Canada, and you would think that, and it would make sense for Tilray to do a little better in the running, just given that this legislation is USA focused. I've been focused on Canada because this stock has other indicators that were already relevant prior to this legislation even coming through. So that was just icing on the cake. We've got the Alcana acquisition that should get approved. We got a positive earnings. We've got supply chain management improvements that I'm expecting. There's also the buyback of shares. There's a number of things that are going well for sundial growers when I originally focused and selected this, and I've been covering this for quite some time. 62 cents and below really felt like you were mitigating your risk. And, you know, Tilray is now starting to come back, and I don't think that's a terrible buy either. Now, there might be some, things that are questionable about their acquisitions and how well those are doing and their financials. Now, Sundial has a lot of money on the books, and this is an incredible game-changing acquisition that should get approved, and it's also a penny stock. So penny stocks typically are going to have more volatility, and if you can manage it, well, you could see tremendous upside. And I believe it's a good long-term investment, even though I'll tell you there's a lot of selling pressure as soon as the market's open. When this got to 89 cents, a lot of people sold. You know who you are, you're protecting your profits, no problem, and let's take a look at the charts at the end of this, but also, is this a hold over the weekend? What happened today in those macroeconomic indicators? Because that's the whole reason that these stocks are moving right now, legislation and what's happening in the market. So it's mimicking things that are happening in the market, and also the trading volume, significant, massive trading volume. So a lot of pressure selling, but also oil prices, because of this attack over in Saudi Arabia. Make sure you've got this on your watch list. If you have not checked or understood that there's a conflict in Saudi Arabia and rebels are attacking, and there's this conflict going back and forth, and a missile strike happened on the largest oil facility in Saudi Arabia, and if that's not going to have implications next week, I'm just, the higher oil goes, the more volatile it's going to be for the rest of the stocks. You see this flip-flop between tech and oil prices, and also the pending home sales dipped for the fourth consecutive month, and they seen a pending home sales decrease of 4.1% in February from the previous month. They were down 5.4% from the same period last year. So that is something also that came out today. And then this survey that the University of Michigan does for consumers also had a data point that was due today, and consumer sentiment obviously is down, and it's at one of its lowest levels back here in 2014, 2010, and 1982. So be sure to understand that as oil prices continue to go up, that's really going to hit consumer sentiment. And those are some of the things that you're going to want to take into consideration. The first thing is, look how far it got outside of this RSI on the 5-minute chart, and on pretty much any of these charts that you look at. I guarantee you, if you go to the 30-minute chart, you see a massive spike. So it's going to come down off that, and you can see it's trying to find support, and that's why I've created this green zone for you for a buy zone. In the Discord, I talked about 76.49, or around that point being a good position where it started to show support for those of you that were looking to buy back in. And then this went down as far as 71.52. So I mean, if you're getting in at this high of a level, I would say you definitely want to cost average into your position anytime you're doing that. I wouldn't have bought in any higher than 76.49 if I was trying to get in this. Now, at that point, you had a decision to make to say, am I going to hold this? And am I going to wait for this to have support? or am I going to sell out of my position? And I said, given everything that came out today, and I don't think it's fully being reflected in the market right now, over the weekend, I'm not sure, just because these macroeconomic indicators can be so impactful. Here at 80.33, it was looking all the way up till 210 to not being able to break through. And when it doesn't, typically, sometimes you'll see this go to the downside. Now, this started trending up and started getting support and finding resistance up here. And you can see at this point here at 83 cents. So, and now it's starting to retrace back down, but you might start seeing these stair steps to go back up to give this support. I will tell you, we are in a high range where I would not be surprised if people exited their position for the weekend. Now, those are people that probably have high cost averages. If you've got a low cost average like 45 cents or under 62 cents, you may want to hold and risk it over the weekend because you don't know that you're going to get back at that price level. You might want to capture profits because you've got a very low risk tolerance and you want to get back into play on Monday morning. I think a number of things could happen, a number of things could work, but I do want to make sure that you're understanding that on a technical basis, there is a lot of people with their hands in here touching this, and they are looking at the technical. So every time this gives over your RSI, you're going to see a pullback. But what you do want to see is in the 5-minute chart and the 1-minute chart for this to stay above this 50 on the RSI and for it to continue this uptrend where it really lost that support. It got out of bed up here and it came down and really went below that. And we hadn't seen it do that in quite some time. So if we go to the 30-minute chart, just to close this out, you can see it's been in a good uptrend in the 30-minute chart. And this shouldn't worry you. If you were in 62 cents or below, then you just hold tight. You just wait for even better things to come. I still think that this has a lot of room to run. But like I said before, nothing in this video should be considered financial advice. You may consider setting a stop loss to protect your profits. I wrote all these things in the last video. I hope you appreciate the video. Have a great weekend. Be safe out there, traders, and be sure to like and subscribe if you like this kind of content. And I'll see you in the next video.